Hey there, Gold Trade Masters. Omar here with your weekly outlook for the 29th of June, 2015. Um, been a tough couple weeks, no doubt. Last week was very tough. Wasn't necessarily a terrible week to trade, just it, there wasn't any traction to be made as far as the trades I took. It was really a very, very flat week. Just ended up with, I think, just a few pips in the bag from several trades. Gold was my biggest target, but I failed to make any big gains from it. We never really saw big pushes. It was the same with oil. The index markets were very difficult. Silver is really the only one that had made some good moves, but again, I'm very, very sketchy to take live trades on silver. So, or at least any worth, a big size. Um, Gold gapped, which is most unusual in my opinion. And depending on the broker you use, it either gapped at the beginning of the week or at the end of the week. And so on LMAX here, you can see that it showed the gap happened as the markets closed on Friday. On Forex Brokers Inc., it showed that it happened the week's start and that we closed just above 1175. But in either case, we closed the week above 1175 and we closed is still well within this weekly triangle that we have. But before we get to actual analysis for the week, let's just go ahead and get it out there that this is most likely going to be a very tough week to trade. We have 4th of July coming up, and that means people will be checking out early from the markets. Markets are closed on Friday, and actually what that causes is that we have NFP on Thursday instead of Friday. So we're cramming, a normal insanely busy week of news into 4 days, and then to top it off, we have the Canadian banks will be closed on Wednesday for their holiday, so it will likely be more of a holiday week this week, and therefore, even though it was a tough week last week, that doesn't mean that we should, pull out all the stops and try to take trades this week. If we don't see the market movement, we don't see good price action, and we're not getting follow through, and I think we could probably tell maybe from Monday, Tuesday, what kind of week it's going to be. If we really don't have those opportunities, then we really shouldn't be trading. And there can always be next week after we get back from the July 4th holiday. So again, with all the analysis that I'm going to do this week and everything that we talk about, please keep it framed around the fact that this is likely to act like a holiday week. We are preparing ourselves for if the chance that it isn't a holiday week, right? So if we do get good markets somehow, because it can happen, that we'll be prepared for that. But we shouldn't go into this week thinking that we're going to attack the market and make a bunch of trades, because I just don't see that happening. But let's be prepared for it anyway. So let's go ahead and get a crack at gold. We're still within this bigger triangle. I want you to note, and we'll go up to a higher time frame here, that I have added a major trend line, which is a thick dark green. Obviously, you can download it. I'll show you the daily perspective here. It actually goes farther back to the weekly, and so this is a major trend line. The interesting thing about it is that it's really a break above 1200 gets us above this trend line, and that is kind of like the most significant bullish kind of move we could have. The reason I say bullish move is because we are currently sitting above 1182. However, there are lots of reasons to still want to short if we rebreak 1182, right? So here's essentially how I see it, is that we can take longs above 1184.75, and we can short below 1182, no trading in between. We will be lining ourselves up with signals in either case, and then we have essentially some other important lines in the sand. And for me, it's going to be 1187.50, which also covers this area here, 1188.45, and then it's going to be 1192, and then it's going to be 1200. And those are all going to be kind of the big blockbuster areas that we really need to break on our way up. So we'll be looking there. This trend line does conflict a bit with 1188.45 and 1187.50, but I'm less concerned about the trend line as I am the horizontal support and resistances. I think they're very, very important. So I will be trading it even if we end up squeezing in between there, but keep in mind there is a risk. Until we get above 1192, staying in between 1187.50 and the trend line, there's a little bit of risk there, so just keep that in mind. On the downside, we'll be looking for a secondary move, again, below 1182 and, ideally below 1178.65 again, and then we'll trade below 1175. Obviously, maybe this next time, if we are to short down there, we may get some better follow through. However, like I said, it might be tough this week. So yeah, that's pretty much it. We should be very, very familiar with the areas on gold that we're trading. Our biggest thing to focus on is what kind of price action are we getting Monday and Tuesday. If we have decent price action Monday and Tuesday, then maybe we can trade this week. If we have very, very cramped or very stalling markets going nowhere, then maybe it's best to just leave it alone. We will judge it also depending on how much wick we see. If we have a ton of little bodies and a bunch of wicks, we know it's not a good market to trade. So, looking at silver. And again, I don't have to go through every chart on gold because you have the charts and you should be familiar with the areas. Well, let's go to the weekly. Looking at the weekly on silver isn't that interesting. Our price vortex didn't really break. I'll get a deeper look at it just to make sure. You can see we really didn't break out of that important area, and I think that is most interesting. But we'll get down to the daily here. You can see that it does look like we broke out of it, and so I always wonder about that discrepancy between the weekly and the daily charts, how it can kind of suck in all that information. But we still have to consider that we are quite bearish on silver, and so we'll essentially be looking for pullbacks to 1628 for reversals, and if we're going to go long, we need to get back up above there. We could maybe stall out at 16 as the whole number as well, and so we'll be looking for short setups that fall, with those kind of pullbacks. On the Fibmaster, we actually have a real nice area to work from, which is going to be 16.0156. So that kind of covers our 16 area. We'll be looking for rejections back down below the bearish Dynafib. So if we reverse, obviously you can trade it up to 1628 on the way up if we have good signals as well. Looking at the FTSE, this kind of goes hand in hand with the gappage on gold, right? So we had a big gap down on the FTSE as we had a gap up in gold. This, again, very, very unusual kind of behavior. I don't recall the last time we saw a gap like this. And so obviously this is quite a bearish look, but at the same time, a lot of times gaps do fill. So we have to be kind of careful that we don't get too excited about shorting until we see a pullback and a rejection. Now it looks like that so far today, but I think that's just getting the weekly kind of start. So really, we're not going to ever want to place a forward order at any level of support and resistance. What we want is we want to see this market continue to come back, hopefully even close the gap or almost close the gap and get up to maybe the Dynafibs and then reject away for sell trade. So certainly looks bearish on the FTSE. Looking at the DAX, good grief. I mean, very same situation. I mean, we had a huge gap down. So remember, last week we were trading above the 11,250 mark, and now look where we are trading, just almost at 11,000. So same advice though as with the FTSE. We want to see essentially a pullback, to get us to a support and resistance area for us to reject. And so we don't just want to try to get out ahead of the train. Also, if we do get a bit of a pullback and then a rejection below our midterm fib, and this applies to FTSE as well, then we can trade if the gap's not going to close. Again, we don't ever know ahead of time, but most of the time those gaps do close. So that's something to keep an eye on. Looking at the Dow, it was a little less gappy. At the end of the week last week, you can see that price was up there, but it sold off. So it pushed back after the gap and then ended up closing. Again, same advice. All the index markets look bearish. We want to pull back to hopefully, get back to our Dynafibs and then look for a rejection. If we don't get a big pullback, then it's kind of dangerous, in my opinion. I find this to be extremely interesting as well, and this is oil. Remember, we were looking for the breakout of that midterm fib while we start the week below it. So really, we have to consider bearish trades now on oil. We'll be looking for a pullback to that midterm fib, possibly even higher, and then close below the midterm fib. We'll probably lose most of these support super convergence zones after Monday. And of course, the advice is still the same, that if we break above the bullish Dynafib, that we can trade higher. So again, not a whole lot has changed since last week except for the gaps and the positioning, but the areas are still relatively the same and the approach is still the same. So anyway, guys, I hope you have a great week of trading. I will see you in the webinars. And again, use a lot of caution this week and don't take any risks that, might even just be kind of risky during a normal week. They're extra risky this week. So let's just kind of play it safe, kick back, let's see how the markets develop, and if we have some good markets to trade, we'll trade. If not, we'll treat it as a holiday week and look forward to next week. Take care and have a great week.